Hi, I'm Stacey from Chelsea Financial Services, and today I'm joined by David Harrison, manager of Rathbone Greenbank Global Sustainability Fund. Hi, David.
Hi, Stacey. How are you?
I'm good, thank you. Now, this fund uses the UN Sustainable Development Goals as a framework. And for those that don't know, the UN SDGs comprise of 17 goals, and they aim to end poverty, protect the planet, and ensure prosperity for all by 2030. Now, it's coming up fairly quickly. And so we've been looking at these goals each week individually, so there's more on our website. But David, specifically looking at this fund, how does that work? How do you go through each holding and then link it back to an SDG, or is it more broadly applied? So maybe if you could just take us through the process a bit more to get started.
Thanks, Stacey. No, it's a great question, and kind of taking one step back. Like you say, the UN SDGs are a really powerful global framework, and probably the only global framework that we have at the moment when it comes to sustainability. So we can compare a UK business with a US business and across different sectors. When we started the fund back in 2018, we mapped the UN SDGs back onto our own sustainability framework. So Rathbone Greenbank have had their own sustainability framework running for more than a decade. So that way, we can show every single company that we invest in, we can show our investors how it links back to a sustainability theme and a UN SDG. And in practice, when we come to meet a company, essentially we're looking for real detail. So if a management team has highlighted, say, number 6 around clean water, when we meet that team, we want to understand, okay, how is that UN SDG relevant to your core business, in terms of profitability, but also, how they're allocating capital in the business, and more often than not now around management compensation. So we need the real evidence, we need the data. In that way, then we can make an informed decision. Then, is this business really sustainable, or is there potentially greenwashing? Generally, we like businesses to target a couple of the UN SDGs. We get a bit nervous when we see companies that will have 7 or 8 linked back to their core business, and there's no real relevance, or it could be for marketing reasons only. So absolutely, everything that we own can be linked back using both the SDGs and our own framework. And we really like the fact that we can show our investors this over time as well.
And you mentioned data there in your answer, and greenwashing. So maybe if we just stick with that, there's more companies seem to be releasing these science-based targets. So I would assume that this helps weed out the greenwashing that you're talking from, if there's these clear and measurable goals. So is that the case, or do you still see a bit of greenwashing coming through? Like you mentioned, maybe targeting too many of these goals.
Yeah, so the science-based targets are a real step forward. So I think if you frame it, we started to see them being adopted in the last couple of years, and really last year, more and more companies are adopting the science-based targets. And the benefit, like you say, is that you've got real data. So if a company is adopting science-based emission targets, essentially they're making a commitment to reducing emissions and showing you that journey over time. And the other benefit you have is that you can track emissions direct in the business, kind of the scope, the scope 1 and 2, then also scope 3 emissions, which is the big thing, the indirect emissions from the supply chain. So absolutely, the more companies that sign up for this, it's a real kind of positive flywheel effect. Like I say, that we're still quite early in the adoption curve, and when we engage with the companies we own, or potential companies want to own, we really encourage them to do this. I think as more businesses go this way, it will reduce the scope for greenwash. You'll be able to track, is the company and the management team really delivering on this? Or again, is it kind of a marketing campaign? So the more companies that adopt this, clearly it reduces the opportunity for greenwash. And it allows you to ask some really interesting questions of management. Can they go faster? Drive more positive change? So absolutely a real big leap forward.
And then how do you engage with companies where you think that there might be this greenwashing, either in a presentation or a marketing campaign, like you said, or even maybe a product that they produce? How do you have those conversations with them?
Yeah, so I think with us, the starting point, we've got quite a high bar in terms of sustainability, but also the fundamental quality of a business. So, that's our starting point. But if I was going to sum up engagement for us, it would be collaborative, because we're long-term owners of capital, but we have a clear exit strategy. That we're really clear about if things don't work out, we're ultimately willing to divest of a stock. So, the engagement happens at all kind of stages of the life cycle of ownership. So, perhaps we might find a business that we like potentially, but there might be one or two things we're not quite sure about. The first thing we'll normally do is we'll set up a call with the management team, with our colleagues in Rathbone Greenbank in the ethical research team, and we'll go to that meeting armed with specific questions around the areas of concern. And again, a bit like the UN SDGs, we're really looking for clear data. We're looking for the management team to be able to kind of answer our concerns. And it's the same thing when we own a stock. If we identify an issue, the first thing we do is we'll speak to the management team and give them an opportunity to really kind of answer our questions and come back with that detail. Now, normally we found that we do that, then it will kind of put the issue to bed, because they will be able to provide the data you need. And sometimes you find with smaller companies, there's sometimes less data that's publicly available. So again, that collaborative engagement is really powerful. But then if we don't get the answer we need, like I say, and there's no improvement or a commitment to improve, then we will divest of that stock. So I think that the collaborative aspect of engagement is really powerful because of the nature of the shareholder we are. We're long only, we're long term, but you have to have the exit strategy as well. If the company is not willing to kind of sort out the issues and prove it's not greenwash.
And then just sticking with a specific goal, we talked recently on the Investing on the Go podcast about green buildings. Sustainable cities and communities is goal number 11. So are green buildings, are these sustainable communities of interest at the moment, or do you think there's still kind of a long way out?
It's a really interesting area. And I think, it kind of framing it, we know that up to 40% of global emissions comes from building and infrastructure around the world. So we think, this is a huge area for improvement when it comes to emissions. And we think, both the medium and long-term opportunities are significant. So I think that the great thing about this area is there's loads of different points you can get exposure to the theme of greener buildings, building efficiencies, and ultimately sustainable cities. So to give you a couple of examples, we've recently been buying a company in the US called Advanced Drainage Systems. Now, what they do is they make pipes out of recycled plastics. So think about pipes and stormwater drains for commercial buildings. Advanced Drainage is, I think they're one of the top 5 commercial recyclers in the US. So you've got that circular economy theme in the background. And their product, it's more durable, it lasts longer, it's easier to install. So there's a real customer benefit for that. So that's a great example of a company that's delivering efficiency. Another recent addition is Owens Corning in the US, which has really stepped up when it comes to efficiency around roofing products and insulation. So on the efficiency side, we're seeing really interesting opportunities. And we also have a number of long-standing holdings in the fund, such as Assa Abloy, which is Swedish listed. They're the global leader in entry systems. Now, Assa has got a very diverse portfolio, but they've really increased the focus on more energy efficiency solutions. So it might be something like a commercial door that reduces emissions by a significant amount. Another stock we've owned since launch is Kone, which is makes elevators. It's Finnish listed, but it has a really strong global footprint. And you might think, why are elevators relevant to building efficiency? But there's huge amounts you can do to reduce the energy used of elevators in a building. So, we think that ecosystem is really powerful. And sometimes, you can get multiple entry points to benefit from that, but clearly the long-term opportunity remains really significant, and we're really excited about it.
And you mentioned some US holdings that you have there. Now, I just want to finish with the US. It might be a bit biased, but you did say recently how positive you were on the US, which, to be honest, kind of surprises me, because I wouldn't view the US as more sustainable or green conscious as, say, Europe. So what makes you so keen on the US? Is there something in particular that the companies are doing that makes you feel so confident?
Yeah, it's a great question. I think that what we've seen in the past several years is a real step change in the US. So I'd still say Europe is ahead of the US, but the US has caught up a huge amount. And we're really seeing this change from the bottom up. The top down, much has been spoken about Biden and the infrastructure plans and Build Back Better. But what we're seeing are the companies that are kind of grasping the opportunity. I think that, firstly, management teams there understand the importance of, how they behave towards employees, supply chains, communities a lot more than they did in the past. But I think more powerfully, it's the economic opportunity of sustainability. So you think about the revenue opportunity or the risk management side. So we're seeing that huge change, which makes it really interesting. And we're seeing that perhaps most powerfully outside the biggest companies. So, I think in the past we've spoken about these hidden gems, companies you might not have heard of, but yet are leaders in their field, are really well managed. So, a good example there would be a business like called Evoqua Water Technologies. Now, Evoqua is kind of not that well known, perhaps outside the US, but they are the clear leader in the US market for clean water solutions. So Evoqua will provide industrial customers with clean water technologies, which is critically important. They also provide technology around improving water infrastructure. They're multiples bigger than the next largest competitor. You've got a management team that embeds the UN SDGs in what they do, and they've got real opportunity for growth. So we're seeing that across multiple sectors. And I think, you've got this wonderful kind of region of opportunity when it comes to investment, and a real step change when it comes to sustainability.
Well, David, thank you. You've given me a bit of positivity on US, if anything. But thank you for joining us. I appreciate it.
Thank you, Stacey.
And to learn more about the Rathbone Greenbank Global Sustainability Fund, please visit chelseafs.co.uk, and don't forget to like and subscribe for more videos.